You've worked hard, you've built your savings, you've paid your dues. But there's one thing that will quietly erode everything you've built, and that's taxes. Most people think taxes go down in retirement, but in reality, they often go up. And it's not because you did anything wrong. It's because of how the system is set up. This isn't a scare tactic, it's just math. If you don't take control now, the IRS could become your largest retirement expense. This video will show you how to avoid the 3 most common tax traps and how to build a plan that protects not just your portfolio, but your lifestyle and your legacy too. Most retirees are shocked when they see how much of their income gets taxed. It starts with the basics: Social Security, IRA and 401k withdrawals, dividends and investment income. But when you layer all of those together and more, you trigger hidden tax traps that multiply your tax burden. For instance, your Social Security gets taxed up to 85% of its value. Your Medicare premiums spike due to income thresholds, meaning they could double or triple or more. And required minimum distributions, when they kick in, whether you want them or not, the income's coming and you got to pay taxes on it. The problem isn't that you're spending recklessly. The problem is that you're being taxed inefficiently. This is where so many retirees get caught off guard. You've been told all your life to defer taxes, but in retirement, that deferral can become a trap. See, the truth is, retirement isn't just about managing investments, it's about managing income and then managing taxes that come with that income. See, the solution really isn't that complicated, but it does require a shift in thinking, a shift from being reactive filing in your taxes to proactive tax planning when it comes to your taxes. Because the biggest tax threat that you face isn't the rate on your 1040, it's the lack of strategy behind your withdrawals. Let's look at 2 major tax traps. Tax trap 1, overpaying on your IRA and 401k. If you've got money in a traditional IRA or 401k, here's the hard truth. That balance is not all yours. Every dollar in a tax-deferred account is a future tax liability. When you start withdrawing, it's taxed as ordinary income. The more you pull out, the more you owe, but it gets worse. At around age 73, the IRS is going to force you to take withdrawals whether you need the income or not. Those required minimum distributions, or RMDs, they don't care about your lifestyle. They don't care about your tax bracket. They don't care about your goals. They just show up and push your income up. Higher income means higher taxes. Higher taxes mean higher Medicare premiums. And higher Medicare premiums means less money for you. The fix? You need a tax-coordinated withdrawal strategy. Now that includes things like Roth conversions during the low-income years, a thoughtful planning process, and taking into account all of your accounts and not just one. Tax trap 2 is the RMD cliff. Required minimum distributions, or RMDs, they don't sneak up on you. You know they're coming, but most people don't plan ahead. And when that day hits, when RMDs hit you, the forced withdrawals feel like a penalty for saving too well. The money you pull out can jump you into a higher tax bracket. The money you take from the RMDs can increase the amount of your Social Security that gets taxed. It can drive your Medicare premiums double or triple what they are today. And it's not just a higher tax bill, it's a total loss of control over how and when you use your own savings. The key is to start planning in your 60s, not your 70s. Strategic Roth conversions, using Internal Revenue Code 7702, smart withdrawal strategies, and building an income plan that reduces the surprises and gives you flexibility to adapt in the future. RMDs are a rule, but tax paying is optional. So tax trap number 3, rising taxes in the future. Now, this one's simple math. Our national debt is well over $33 trillion. Current tax rates are near historic lows. And you better believe the IRS has a long-term plan to fix that imbalance. Retirees with big balances in their IRAs and 401ks and other tax-deferred accounts are walking around with a target on their backs, even if they're no longer working. Now, here's what matters. If taxes rise even modestly, your withdrawals suddenly cost you more. If you're on a fixed income, that extra tax bill comes straight out of your lifestyle. And if you do nothing, your heirs could be hit even harder when you pass those assets on to the next generation. But good news, you're not powerless. You have a planning window. We call that the golden decade. This is your last chance. This is your best chance. There's a short runway between your late 50s and early 70s when you can still take control of your income, your tax bracket, and your Medicare premiums. We call it the golden decade. And it's not a marketing gimmick. It's your final opportunity. Your final opportunity to lock in today's low tax rates through Roth conversion, to lock in today's low tax rates through using Internal Revenue Code 7702, to lock in today's low tax rates by repositioning assets into tax-efficient vehicles like Roths or Internal Revenue Code 7702. You can reduce your RMDs in the future before they become mandatory when taxes are very likely going to be higher. You can also create guaranteed income sources that won't spike your tax bill or your Medicare premiums. This isn't just smart planning. It's your chance to reclaim control before the government takes control away from you. Let's bring this home. This isn't just about the IRS. This is about your freedom. Because when you don't have a tax plan, your money doesn't belong to you. It belongs to the IRS. It belongs to the IRS's future tax rate and the future schedule they have in line for you. And let's be honest, do you really trust that your taxes will go down? Do you really trust your taxes are going to go down when the debt is climbing and retirees are the easiest targets? What you need isn't a generic projection. What you need is a retirement tax blueprint, a plan that lowers your lifetime tax bill, that shrinks your RMDs before they control you, that coordinates your income with your health care and Social Security decisions, that protects your legacy from Uncle Sam. You worked hard your whole life to build this. Now's your time to lock it in with a strategy. We invite you to join us for our Retirement 101 class, where we'll teach you how to slash taxes in retirement. We'll teach you how to convert tax-free accounts the smart way. We'll teach you how you can build a plan that gives you clarity, confidence, and control. This is your window. This is your moment. Don't let taxes write your retirement story. Write it yourself with intention, with wisdom. Write it with power. Click below to request your retirement blueprint today.